Last week, we saw the VIX went back up to 20, and also it popped 15% on Friday. And between Thursday and Friday, the VIX actually moved up over 30%. It went from a low 15 level up to almost 21 just between Thursday and Friday, and that's almost a 35% pop. So is the option market pricing in for a big drop from the S&P 500 in the day or week to come? Well, in this video, we're going to take a look at the sentiment, the internals, and I'm going to show you some statistics that might surprise you on what the S&P 500 have a tendency on doing. Before we go and look at those statistics, let's take a look at what the market has done in the week that just passed. Here on this table, you can see the best performer for the week was the Dow Jones Industrial. It was up 0.79%, a little bit over 260 points. And the New York Stock Exchange Composite is also up there. It was up 0.72%, or a little bit over 109 points. The S&P 500 is only up 0.45%, or 19 points or so. And the NASDAQ 100, 0.15%. A little bit under 22 points. The NASDAQ Composite was actually down 0.18% and lost 24 points, with the Dow Jones Transportation following with a loss of 0.73% or 108 points. And the worst performer is the Russell 2000, and it lost 1.48%, almost 26 points. So looking at this weekly chart of the S&P 500, you notice that last week, the range was just a little bit over 102 points. It closed below the 10-week moving average, but still above a ascending 40-week moving average. And it is still holding this intermediate lower low, lower high, but it is holding this year-long supporting trend line here. And looking at the sentiment, we noticed that the VIX was 19.32 as a close of Friday. So the market participants are still quite fearful, although they are not in a panic mode yet because they haven't got into this zone here between 20 and 30 or even get above, the 20 level. Now, as soon as if it get over 30, then definitely, the market participants are getting quite fearful and getting panicky. Also, in addition to that, the put-call ratio is still under 1, although it is in this hedge zone, what we classify between 0.75 and 1.0. It closed on Friday at 0.96, so the market participants are in a hedge mode, and they are not completely bearish, but they are getting to that point because it is getting close to this one. And looking at the up-down volume ratio for the New York Stock Exchange, we noticed the first 3 days of the week was positive, so that implied that the up-down volume ratio was in favor of the up volume. And on Tuesday, we actually saw a up volume ratio of 4.8 to 1 in favor of the up volume. And also the advanced decline was more than 1,400. It was 1,474 more advancing issue than declining issue. Now on Thursday, when we saw this sell-off about 0.6% on the S&P 500, we did see the up-down volume ratio went negative 4.4. In other words, 4.4 to 1 in favor of the down volume. And also the daily advanced decline, it was almost 2,000 more declining issues than advancing issue. Likewise, on Friday, we did see a 0.5% decline on Friday, but the up-down volume ratio was not as bad as on Thursday. It was only a minus 1.3, so it's only 1.3 to 1 in favor of the down volume. And also the advanced decline, there was 727 more declining issue than advancing issue. So it wasn't as bad as Thursday. It was almost 2,000 more declining stock than advancing stock. Now, for the new high, new low in the New York Stock Exchange, we did see a positive new high, new low on Tuesday. So in other words, there were more new 52-week high than 52-week low. But other than that, all the remainder of the week, it was negative. So the new 52-week low outnumbered new 52-week high. And here in the cumulative AD line, we're primarily looking for divergence, either negative or positive divergence. Although it's not completely a divergence, but we are seeing a little bit of a contradiction. Right? You see this S&P 500 took out this pivot high here. So in other words, you could say it is making a higher high, but then you look at the advanced decline, the cumulative advanced decline, it is not making a higher high. Even though it did take out this pivot high by a small margin, it is not enough there to say it is showing some sort of a strength internally in the advanced decline issue. And look at the NASDAQ market, we also noticed that the up-down volume ratio for the first 3 days of the week was positive as well. But we are seeing a little bit more of negative in the internal of the daily advance and decline, because on Tuesday we have a negative advance decline. There's actually 122 more stock falling than the advancing issues. And on Thursday we have over 2,000 stock that are 2,000 more declining stock than advancing stock. And on Friday there were 1,063 more declining stock than advancing stock, while the up-down volume ratio is almost 2-to-1 in favor of the down volume. On Thursday, the up-down volume ratio was 3-to-1 in favor of the down volume. And here in the NASDAQ 52-week high versus 52-week low, you notice that we have not seen a day that there were more 52-week high than 52-week low since the beginning of September here, back here on September the 1st. So we are seeing quite negative weakness in terms of number of stock making new 52-week low versus number of stock making new 52-week high. And here on the cumulative AD line, you can see that we are still looking at these negative divergence and waiting for it to get resolved. See this, the NASDAQ 100 is actually putting a higher low, while the cumulative AD line here is putting a lower low. So based on the sentiment and the internal, definitely things are not improving. I think you might be a little bit surprised in seeing the statistic of what the S&P 500 have a tendency of doing after you have done certain things, which we will talk about a little bit more next. A couple of weeks ago, I put out a video pointing out a couple of observations. One of them is the 4 consecutive down week, and then the other one is 2 consecutive down one. So here on this chart here, we see that 10-year chart of the weekly for the S&P 500. And what I have did is mark off those occurrences where we saw the S&P 500 down 4 consecutive weeks. So let's zoom this in here and take a look at this one here. Back on October 2014, you see we have 4 consecutive weeks and then followed by multiple up week here. So this October is basically a little bit of an October low here, and then we got a nice pop. And if we go back and take a look at the other occurrence back here, and take a look at these two, and these two occur back in 2019. This one is in May timeframe. You see 4 down week and then followed by 3 consecutive up week. And here is the August 2018. So again, we got 4 consecutive down week and then followed by 3 consecutive up week. And on this one here is the September 2020, and we saw 4 consecutive down week and 3 consecutive up week. Now, then here is the most recent one, which was December of last year. We have 4 consecutive down week, but we only saw 2 up week. Then we followed by a down week before making another 2 consecutive up week. Then here's the recent one that occurred back in last month, September. We have 4 consecutive down week, and the first 2 weeks of October, we actually have up week. In that video, this video here that I was talking about, the 4 consecutive down week was followed by up week. So we basically was looking for at least 2 up week based on this last occurrence, at least 2 consecutive up week. Now the question is, will it have a 3rd consecutive up week like some of these previous one, other than the one that we just saw back in December of last year that only went up 2 consecutive up week after 4 consecutive down week, or the other 4 was followed by 3 consecutive up week. So based on the statistics, it's certainly a favor for us to see another up week next week, because the odd is 80% that it will go up and 20% that it will go down based on this occurrence. It tells us that we could expect an up week. Now, the other thing that I talked about in this video was the 2 consecutive up month. Right? So we basically looking at this 10-year monthly chart here, and I have marked off all the occurrence where we saw at least 2 consecutive down month. So you see here we saw basically coming up all the way to end of September, we saw 19 occurrence in the last 10 years where there were 2 consecutive down month or more. Okay, and what I did is I mark off those one that have more than 2 consecutive down month with a little bit of a rectangular instead of an ellipse. Okay, so you can see that's 1, 2, 3, 4, 5. So there were 5 occurrences, that is more than 2 consecutive down months out of the total of 19. So based on statistic, we saw 5 out of 18 so far of the occurrences that have more than 2 consecutive down months, while 13 out of the 18 will stop at 2 consecutive down months and then experience at least 1 up month. So that kind of tells us 72% chance that October will be a positive month based on the last occurrence of 2 consecutive down months. We had a down August and a September. So we're expecting the October to have 72% chance ending up as a positive month. So statistically, it tells us that there are 80% chance that we will see next week to be positive, and 72% chance that October will end up positive. These are based on statistics, but of course, statistic is only a probability, right? It's not a certainty. we could still see a negative week for the coming week and a negative October, because certain geopoliticals and macro could be different, because every time these occurrences appear, there's a different context. So we have to understand the context, but just based on the probability and the statistic, it is in favor of a positive week and a positive October. Now that we got the statistic out of the way, let's take a look at the indexes itself and then see what are some of the possible scenarios going forward. So if we are looking at the possibility of 80% this coming week will be positive, then we're basically looking at one possible scenario is for the SP 500 to possibly come up to this upper range, right? Because all it has to do is close above this 43.2779 on Friday, then we have a up week. Okay, so now the scenario is that we could get a flush down early in the week and come down to this 4250 area and possibly even come down to this 4200 and then pushes back up, and then we get a close above this level and get a positive week. Now remember, the other thing is Tesla going to report earnings after the close on Wednesday, so Tesla could play a little bit of a havoc into this S&P 500 price action. If Tesla have a positive reaction to the earning, it could very well help push the S&P 500 to come back up to this 4,400 area and possibly maybe make its way up toward this trend line here near this 4,440. So we could see that possible upside scenario if Tesla have a positive reaction to its earning. But if it has a negative reaction, then yeah, Tesla could help push this thing down and might even push the S&P 500 toward this 4,100 level before we get a little bit of a bounce back up. Now, we're going to have a heck of a bounce to get to the monthly positive close, right? So if we take a monthly look on the S&P 500, here's the end of September close. It closed at 4288.04. So in other words, all it has to do by the end of October, it closed at 4288.05, and we have a positive October. Okay, remember we're looking at this, for a positive October close based on the historical statistic that there is a 72% chance that the October, after 2 consecutive down months, then we see a positive month to follow. Now that doesn't mean that it could not come down and test this 4,100 before it bounces back up. So that's the scenario that we are basically watching for. It's some sort of a pullback before the end of the month. So in other words, we could see a new October bottom, October low. Now we'll take out these low here. So it could come down to this 4195 or possibly even come down to this 4100, depending on some of the macro and geopolitical stuff that's going on right now. If something, like a black swan thing happened, then we could very easily see a flush down to this 4100. So the key thing to watch is basically this range here. The 4200 is a key level to watch. Okay, if we break 4200, then we'd be looking at the possibility of coming down to 4100. If we could break back above 4400, then we could possibly looking at to come back up toward this 4600 level here. But that is a big if. First is what it's going to do here. What is it going to do right here at this 4225 area? Is it going to come down and move down to the lower range, or is it going to bounce up to this upper range? And here looking at the NASDAQ 100, the NASDAQ 100 is trying to reclaim this trend line here that it has broken down from. It's broken down here, and now it's trying to reclaim. And once again on Friday, it kind of peaked below it. So right now, we still want to see would it be able to come back up above this trend line, because there is this resistance down here, up here at this 15,265. So it has to get back above this level, 15,265, in order to make us move back up toward this 15,500, 15,600 area. Now, we are looking at some weakness from the NASDAQ because of the AD line. Remember the advanced decline and also new high, new low. The internals that we're looking at for the NASDAQ, it doesn't look that good. So we're basically looking for the NASDAQ to come down and break this 14,800 and work itself down toward this 14,245. And that might get a little help from Tesla on a negative reaction on Tesla earning after Wednesday's market close. So look for a Thursday flush. We probably will get some sort of flush on Thursday if Tesla earning is bad. But if it is a positive reaction, then we could come up and try to get above this level here at this 15,000 level and try to close the week with a positive week for the NASDAQ 100. So once again, we basically are looking at the NASDAQ somewhere around this 14,800 and 14,245 or 250 area. So these are the two key levels to keep an eye on the downside. And on the upside, watch this 15,265 area. If it could break above this, then we're looking at higher level. But if it breaks below this 14,800, 14,700, then look toward this 14,200, 300 area, okay, for possible test of support. And for the Dow Jones Industrial, we're basically looking for the Dow Jones Industrial to come down to this 32,500 level, 32,500 area. So come down to this area here to see whether we're able to find support. And if it doesn't, then we're basically looking for the Dow Jones Industrial to come all the way down, eventually to test this level down here near this 30,300 area. Now, if we could come up to this 34,300 area, that would be a resistance that we need to keep an eye on and see would it be able to break this resistance, because we're also looking at this trend line here coming down. So we need to break back above this 34,400 to get back above and try to work toward these higher high here, these pivot high. But if it's unable to get it back above this 34,400, we're basically looking for the Dow Jones Industrial to work itself lower down to this 32,600 and 30,400 area. And for the Russell 2000, we'll continue to look for the Russell 2000 to work itself down to this lower edge of this big consolidation area here, this multi-year consolidation area. So we're basically looking at this, this 1640 area here at the lower edge of this balance area. So yeah, it might come up and try to get up to this 1780, this area, 1780, but look for this to come down, take out the 1700, and then break down and work itself down toward this 1640 area here. So basically, the Russell 2000 or the small cap is quite weak, and we have seen that it is the worst performer from last week. So since Tesla is scheduled to report earnings on Wednesday, let's take a look at what the market is pricing in. This is the upper range for Tesla, 275, 268.90, and the lower range is 233.40, 230. So it's basically a plus or minus a little bit of around 9% move for Tesla. So depending on how Tesla react to its earnings, if it come up and take out this 275, break this trend line, move up to 280, then yeah, we could see Tesla to come back up to the 300 level. But if Tesla breaks down and break down below this 230, then look for this 212 area or the 210 level to see would it be able to find support. And if it break this 210, yeah, then we'd be looking at these level down here, possibly this 150 area. So those are the levels to keep an eye on for Tesla. Now, the last earning report in the last quarter, you notice that Tesla also gapped down and it came down to this 212 level and it got a nice bounce back up. So right now it seems to be putting in a higher low, but also a lower high. So a little bit of a converging, a triangle type of a pattern. So if it breaks down again because of a negative reaction to Tesla's earnings, and come down and test this 212 once again, then there's a good possibility that it could break this 212 and work itself down into this area here, this 176 to this 164, 165 area, into this area here where there's some acceptance. And of course, we need to talk about Apple because Apple is going to influence where the SP 500 is going to go to a great degree, right? Just like Tesla. So looking at Apple here, the upper range is somewhere around 184 and 183, and the low range is between 174 and 173. So if Apple could break above this 180 and move up to this trend line here and get up above this 184, then we could see the possibility to come back up to this 190. But most likely, I'm looking for Apple to pull back into this lower range, just somewhere around this 174 area, and see would it be able to find support here. And if it doesn't, then we'll be looking for Apple to come down to this area, work itself down toward this 164 area, this level here. So just a final note, looking at the VIX here, we see the VIX is sitting up here at this 19 level, and I'm saying that keep an eye on the VIX. If the VIX could pop up and get above this 30 level, then yeah, we could be looking at the S&P 500 coming down toward this 4100 area. So keep an eye on this VIX here because you see this pop here from last Thursday to Friday. Wix and TD saw the VIX move up in the range of 35% or so. Okay, so just on Friday, it it popped up 15%, almost 15% on the VIX. So keep an eye on the VIX. If it get above the 20, watch that 30. So I hope you find the content in this video to be useful, and be sure to smash that like to help promote this video. And also, if you are new to this channel, click on the subscribe to support this channel so you'll be able to continue to watch the content. And be sure to go check out my Substack page. The link is in the description below, and you will find a level to keep an eye on for the SPY and also the E-mini S&P 500 future for the coming week. So thank you for watching and stay safe.